This is Cece. Welcome to the Orbit. It is Tuesday, April 23rd. We've got stocks higher this morning. We're looking at the SPX up about 0.8%. That follows a very strong day yesterday. The question that a lot of traders and a lot of investors have right now is the sell-off over? Is the correction? We saw the SPX down about 6%. We saw some of the big cap tech names get hammered the last couple of weeks. We saw the Qs down. We saw IWM down. Is it over? And if you remember going back on the orbit about a week ago, going into Thursday and Friday of last week, we talked about how if this pattern repeated of the last time we saw rising interest rates and its effect on the market, it was back here on the chart. Right, and what this was is this ended up being about an 11% correction, and it didn't really stop until the backdrop of why people were a little afraid in stocks and why they were selling stocks until that was removed. And the way it worked was a 2 steps down, 1 step up, 2 steps down, 1 step up. Those happened to be about 5 to 6% moves each time, with a retracement of about 50%. So if this is the case, and that is what's going on, then where would that put a SPX rally? Well, we can see right now, if we go to the 1 month chart, we topped out at around 52.50. We got down to about 49.50. That is 300 points. From 49.50 up 150 points is, puts you about at that 5,100 level. Now, those things aren't exact. It could go, stop short of that. It could go higher than that before any sort of reversal if it did play out like last August, really. Now, it could have been the bottom, and that could have been it, and maybe the 6% pullback in the market was just what the market needed to go make new highs. But going back and thinking about what we talked about last week, that would probably mean that TLT, for instance, just using that as a proxy for the entire bond market, that would mean probably that TLT would have had to have made a low, and it keeps going higher, at least sideways, and it doesn't go down back below this level, which it saw, call it 87, 88, 87.5, 88. So if TLT were to hold above this level and stay in the 90s, and obviously if it kept going back towards 100, well, that would mean that the interest rate environment and the treasury yields stopped going higher, and there would have been something to cause that, whether that's the Fed, whether that's upcoming inflation data. That's obviously what could help the market and help stocks higher. So keep an eye on TLT. The other thing to keep an eye on that we talked about last week, and this is again a proxy for one of the big effects on inflation right now, which is oil prices. We have USO, it's down from these highs. It's down from 82, and of course we had that really huge overnight spike on Friday morning up to 82. Keep an eye on this. Does USO keep coming down? And let's pull it back to the 3 month chart. Does it keep going lower, or does it keep going? Does it bounce here and head back up over 80? So these are, TLT below or above 90, USO below or above 80. And do they start a trend in the other direction? That would obviously be bullish for stocks. If they do not, be very careful about that next level where it's sort of a 50% retracement higher. So we've got SPX. This is short duration out to the close. Got about just under about a 0.5% expected move. That IV, we've been pointing that out a lot lately. You can see that 22 IV for 0 DCE. That was 26 yesterday. It was 32 on Friday. So this is what we're talking about. It's already starting to compress. Options are already starting to come in. And speaking of that last August example, when the SPX made that first 5% move lower, and then it bounced, and it didn't even get back to its prior highs. It only retraced about 50% of that move. The VIX went from, it started at 13 before the sell-off. It went up to about 18 during the sell-off, and at the bottom of the sell-off, on that rally, it went back to 13. And then you saw the second leg of the sell-off, and that time the VIX then went 13 to 21. If this bounce we're seeing in the market right now, if it starts to tire, you want to be very careful that if you're a premium seller, you're not selling very low vol. And obviously, if you are looking for hedges, you are not far from the highs. And if vol were to compress, and that's an opportunity possibly to get in there with put spreads and puts and things like that at lower volatility if you think that this wasn't the end of this sell-off. And the same thing is true if you think, if you saw TLT go back to 100 and USO drop to 70, and you were like, okay, I think the worst is over, and the Fed's back on track to lower interest rates this year, all of that sort of stuff. In that case, then you would want to wait for that VIX to get back below, 15 towards 14, something like that, which could easily happen if we saw a couple more days of stocks in the green like this. As we're speaking, the market is ripping, and it's up about 1.1% now. So you're seeing that kind of move, and this is not uncommon. And there's probably a bunch of traders sitting around saying, I can't believe stocks are rallying, like we couldn't have been more bearish last week. That's how this works. Tesla earnings after the close. Let's just check in on that real quick. We've got an expected move of about 9%. Let's back this chart out a little bit. And this is obviously, this is ugly. So you look at where Tesla is, and you look what options are pricing. That kind of volatility, and they're basically, the options market is saying for earnings, it's almost as if, it doesn't care. This is a much smaller move than what the stock just did on its own into earnings. That pales in comparison to the way the stock has been getting hammered lately. I mean, 9% is nothing. Like even this move right here is, this is down 20% in, basically in the last couple of weeks.